NDAS 1 preparation and presentation of statement. Preparation is left, but presentation of financial statement is NDAS 1. What is that? The standard prescribe the basis of presentation of a general purpose financial statement to ensure comparability both with the entity's financial statement for the previous period and with the financial statement of other entities. So previous year to compare, and not only that, other entity that also we need to compare. So for both the purpose, this presentation of financial statement is used to set up overall requirement of presentation of financial statement, guidelines for the structure and minimum requirement for this content. So what? So the overall objective, the requirement of presentation of financial statement. So to be true, fair, everything should be there, na? So comparable with the previous year financial statement and current year financial statement, that should be compared. The guidelines for the structure and minimum requirement for them. So what is a guideline? How you should present? What is asset? What is liability? What is contingent asset? What is how this asset to be considered? How if that considered, how to be presented? How you can compare is all the viability is being given and minimum requirements are this much you should give minimum maximum it's up to you the minimum requirement also given a complete set of financial statement. What is a complete set of financial statement which is presented include comparative and at least annually consist of. So the comparative financial statement can be compared annually, quarterly not required. But quarterly not required, they have not said. They said annually at least you need to compare. Quarterly, if you're comparing, monthly you are comparing, weekly you are comparing, day-wise comparison also not an issue. But one thing is you need to compare at least annually. Balance sheet end of the year. What is a balance sheet? Profit and loss statement. Profit and loss statement. Balance sheet, statement of change in equity, who and all owning how much shares, statement of cash flow periodically, cash flow, how the cash come in, cash goes out, notes and comprising significant accounting policy and other explanatory information, comparative information respect of preceding period. So balance sheet we are P&L we are required. Then cash flow equity required and cash flow required. Not only this, notes, significant accounting policies, procedures, and explanation for explanatory information. Explanation is okay. Information. So explanatory should be informationally, it should be explanatory. That's they are stating it. And comparative information respect of preceding year. So balance sheet preceding year, P&L preceding year, cash flow single year, not preceding year is not possible. So cash flow preceding year came, cash flow is from that preceding year only. You should understand that. The entity shall prepare the third balance sheet as at the beginning of the previous year, along with the requirement of comparative information for the year if the retrospective applies in accounting policies. Retrospective restates the items of financial statements and reclassify the item in financial statement. Why third balance sheet? Sir, we are giving some effort, but the effect is going to be retrospective. Then you need to prepare an third balance sheet. When you should prepare beginning of the previous year. Previous year beginning itself you need to create and previous year that will change will come. Then after current year this should affect. Such a way any accounting policy, any accounting changes you make that is going to affect retrospectively. Third balance sheet to be prepared. General feature of financial statement. What is general feature? Present, true and fair presentation and compatibility with Indias. So what they're saying, it should be true and fair view. Fair view, it is giving true and fair view. Saying, na. So what is the view we are saying is it is presented properly as per the financial statement. That is what's it. Prepare the financial statement as going concern. Going concern is important basis unless management either intend to liquidate the entity or ceases trading as no realistic alternative but to do so. So the company itself, they have a problem. Company itself have a problem. No, what problem? Sir, we are thinking of closing this company. If they think so, if that to be done, then you can say, sir, this company going to be liquidated. You can say clearly. Prepare using accrual basis of accounting, except cash flow information. Cash flow always should be receipt basis, but So accounting should be accrual basis, though you should understand the difference that has been stated. Present separately each material class in a similar each class of similar items. Fixed asset na you have buildings, that's it. Then plant and equipment. I have machineries, I have cars, I have bike, I have motor. Not only that, I have generators, I have many things I have. So how you do that? The present significant items of present separate item for dissimilar nature and functioning unless they are immaterially except when required by law. So similar items you should pack and dissimilar items should be given separately. And you need to give it separately unless and until the law required to say so. The law doesn't require to say so, no issue. The shall not offset assets and shall not offset liability and offset income and offset expense unless required or unless permitted by NDAS. You can't offset income and expenses and assets and liability unless the law permits you can set off. Now you can do unless if that not been permitted you can do it. You should show expenses separately, income separately, assets separately, liability separately. The present comparative information respect of preceding period for all amount reported in current period financial statement. What? Present comparative information. Balance sheet comparison, P&L comparison, respect to preceding period, previous year for all the amount reported in the current period financial statement. So the previous year financial statement we are given something that should be comparable with the current year. You can't bring something new and you can compare with the previous year. Previous year we have established the balance sheet. As per the balance sheet only, you can give the current year. You can't give something new. That will not be the basis of comparability. There will be no meaning if it is not comparable. You should compare both. That is what said. Shall retain the presentation classification of items in the financial statement from one period to the unless next. So retain the presentation and classification of item in the financial statement from one period to next. So one period it should present and next period it should be comparable. It is apparent following significant changes in the nature of entity's operation. So what is a significant change in nature of entity operation? It is apparent following a significant change in the nature of entity operation. So I'm making a change. The organization is changing its operation. Then you should note it. Review of financial statement. A significant change in review of financial statement. The total accounting process itself changed. The another presentation or classification would be more appropriate. If that is the mean, that is a problem, then the financial statement of one or more retain the presentation, retain the classification of item in the financial year for one more period, for more than one period. When there is a significant change, when there is a change in the review, when there is another presentation, another classification is there, then you should do. You can give more than one period. As India is required to change in the presentation. The India is saying you change the presentation. Then what you should do? This is the previous balance sheet. This is the current balance sheet. This is the effect of giving the change in presentation of previous year and current year. And this is the third balance sheet. So five things should give in the same balance sheet. The entity where financial statement comply with the India should make explicit. So explicit, no, it should be given separately. Comply with Indies. So it says that this is following Indies. This is not following Indies. So Indies, if they say you should follow, you should follow. There is no alternative option at all. Unreserved statement of such complaints in the notes. You should say, sir, we have a complaint in NDAs, and this places we have not complained. No, you should say you not complained. Why the reason for the non-complaints also you should say, and whether the NDAs is not giving the opportunity or management is not following it. That is also you should state it. Entity should not describe financial statement as complying with the NDAs unless they are complying with all the requirement of NDAs. You can't say I'm complying NDAs and not following it. If you say you are complying NDAs, you should follow the NDAs. You can't say lies in the balance sheet. Structure and content. What is the structure and content? What is the building? Yeah, being a drama. Ind AS 1 does not provide format for presentation of financial statement. There is no prescribed format. However, it provides a line item to be presented. So I'm not saying you should present the way, but I will give you the tools. You can build how much you want, but this is the basic foundation you should have. These all the things should be there. With this only you can build. You can bring in something new. If they are material in the balance sheet, statement of profit and loss as loss, and statement of change in equity. So these are the basic things. The format of presentation of financial statement is provided in Schedule 3 of Companies Act 2013. So Companies Act says you should follow as per the Companies Act. What is a balance sheet? The balance sheet shall include line item that present the following amount. What are the amount in respect of equity, in respect of assets, in respect of liability, in respect of assets and liability. So So the balance sheet, what is this? In respect of equity, what? The issued capital and issued capital reserves attributable to owner of the parent and non-controlling interest. This is linked with equity. I know. Equity now what? Share capital. So I'm equity have and another also equity also include reserves and surplus. So this is the owner's thing. Then that is also not what is to the owners, what is to the non-controlling interest. So there are two things: controlling interest and non-controlling. Controlling interest of the owner mostly probably, non-controlling interest are giving to shares. So in this case, in the case of equity, in the case of equity, respect of equity, equity issued and resource surplus. That is mean in respect of assets. What are the property, plant, and equipment? So, what are the property? We have land, building, plant. What is the material machines we have? Equipments we have motors, we have cars, vehicles, JCP, tractors, this kind of thing. Investment property where we invested real estate or in plant and machinery, anything intangible assets, softwares we have, patents we have, financial assets. We have given loans, we have bonds, we have bought bonds, we have bought debentures, we have gold bonds. Investment accounted for using equity method. Accounted for using equity method. So what? I have invested in shares. Now, biological assets. We have cows, we have goats, we have trees, inventories, the business we do, we have stocks, trade and other receivables. I have done some sales, receivables are there. Cash and cash equivalent. I have cash, I have gold bars, gold coins are equivalent to cash. I can exchange bitcoins I have, that is equivalent to cash. Current tax asset. This current tax, sir, I have paid, I have done some professional service. TDS has been deducted. That is receivable. Current tax, deferred tax asset. Sir, this is the depreciation as per my company side and the depreciation as per the income tax side. I have a less depreciation, but the income tax is higher depreciation. So I had to pay more tax rather than less tax. So that makes an deferred asset in this case. So this is what said in the in respect of assets. In respect of liability, what is that liability? Trade and other payables. Trade and other. So I have bought something. I have bought some goods. I need to pay back liability. Provisions. So I need to pay a rent. I need to pay electricity bill. I need to pay salaries. So of this I have not paid. This is a provision to pay. Financial liability. So I have bought some loan. For that loan, I need to pay interest and repay the principal. That is a liability. Current tax liability. I have done some sales through that I collected GST. I need to pay back. Current tax liability. I need to pay income tax. So that is current tax liability. Deferred tax liability. So I have a higher depreciation than the income tax. That's why that is an obligation to pay tax that comes into the process of deferred tax liability. In respect of assets, in respect of liability held for sale. Held for sale, na? I'm going to sell it. A total asset classified as held for sale and as assets included in disposal group classified as held for sale. So I have a branch. That branch I going to close. So through that closing, I need to sell that asset. So I'm not going to use it. So that is held for sale. And liability included in disposal groups classified held of sale in accordance with Ind AS 115. Non-current assets held for sale and discontinued operation. So I'm going to sell that asset. So after closing that asset, I need to pay something. What I need to discharge a liability that is due to the asset held for sale. What is that? I need to pay the property tax. If I have a building and that is in that I discontinued operation, I'm going to sell this furnitures and utilities there, buildings, sofas, everything there. But now a problem arises. I have raised liability. What kind of liability? I have I there is a person who will be who will be conducting that business of sale. So the liquidator, I need to pay some charges. If I sell, I need to pay GST. That is my liability. If I sell, I need to. I'm pre-closing my lease agreement. That creates a liability that as per the contract. That is a liability. That's kind of things are there in non-current asset held for sale and discontinued operation. That has been there, said this. Entity should classify all the assets and all the liability as a current and non-current in the balance sheet, except when the presentation based on the liquidity provision provides information that is reliable and more relevant. So mostly these assets and liabilities classifies asset and liability as a current and non-current. What it means? So that is a less than 365 days, more than 365 days. That's when 365 days is current and 365 days is non-current. This is the time limit that the states is current and non-current. Except the presentation based on liquidity provision, information that is reliable and more relevant. So that makes the things more reliable and relevant. So here comes. So what is current tax? What is current liability? We will see. They expect to be realized, used, or sold in normal operation cycle. So in my normal operation, it is current asset. I able to get that within 365 days. I will use it in 365 days. I will sell it in 365 days. My business is to do such goods, and it is my business. That is current asset. Current liability expect to settle in the normal operation cycle. So it is maybe 365 days or more because some contracts may take 3 years, 2 years, 5 years. Even the government say it is 365, more than 360, but my operation is 365 days process, more than 365. Then it will be current as current liability held primarily for trading. Producing held primarily for trading. So current asset. I'm doing the business. So the business is that is like my business is example selling of gold. Gold is correct asset. But if my business is going to be say, a sale of sculptures, the sculptures will not be sold in a single day. It may takes years to sell. But in my today time, it is trading. May therefore 3 years, 4 years to one day it will sell. So I'm expecting to sell in one day. So it is current asset held primarily for trading as current liability, expected to be realized within 12 months after the reporting date. So you should have 365 days that has been current asset. So expected to be settled within 12 months. That is 365 reporting period. Cash and cash equivalent. What is so this kind of cash and cash equivalent? It does not have any unconditional right to defer the settlement to the liability for at least 12 months after the reporting period. So some liabilities are there. I will settle it within 12 months. Example GST. Then income tax. 12 months you should settle it. Then salary, rent payable. These are the provisions. Some which can't lead more than 12 months. That is it. Entity shall classify all other assets as current, non-current asset. Entity shall classify all other assets as non-current. Entity shall classify all other liability as non-current liability. Whichever doesn't come into this ambit condition to be considered as a non-current asset and non-current liability. So what is non-current liability? Non-current asset is whichever is current and non-current, whichever is not current and non-current is non-current asset and non-current liability. We can say this is way we can speak. So statement of profit and loss account. What is this stage? The statement of profit and loss account should present, in addition to profit and loss, other comprehensive income section. Usually, the statement of profit and loss account has only statement of profit, income, and expenses. But right now, they have bought an additional point that is. Comprehensive income section. The second point. The comprehensive income is something other than profit and loss account. When total other comprehensive income and comprehensive income from the period being the total of profit and loss and other comprehensive income. These are to be there in the profit and loss statement. The other comprehensive income comprises of items of income and expenses, including reclassification adjustments. So I'm reclassifying something. I'm increasing the value of an asset. So that is also my income right now. So they are not recognized in the profit and loss should be required to be permitted by other NDAs. So the other comprehensive income is something which can't be shown in the normal profit and loss account. It is something different. A total comprehensive income is a change in equity during the period resulting from transaction. Another event other than those changing result from transaction which owners in the capacity as owners or total comprehensive income is equal to profit and loss plus other comprehensive income. Some changes we made in the equity that is not the income of our normal business purpose, so that should be also included in the total comprehensive income. The reclassification adjustment of the amount classifies profit and loss to the current period that is recognized in other comprehensive income in the current and previous period. Or any items of income or any item of expenses or extraordinary item shall not be presented in the statement of profit and loss in other notes. Yeah, that can't be extraordinary item should be said separately. That can be stored in the statement of profit and loss. An analysis of the expenses recognized in profit and loss shall be presented using an classification based on the nature of the expenses method. So what we need to analyze. That analysis is based on what? Recognized in profit and loss shall be presented using a classification based nature of expense made. So what is the expenses? So I made purchases of assets. That is purchases. So I made some purchase of goods I stores traded. That is purchases. Made some salary expenses. That is expenses. I made some compensation to employees. That is other expenses regarding employees. So I made the allowances to employees. So what are the expenses based on their characteristics? That expense to be allocated in the profit and loss statement separately. Entity shall present additional line items and headings and subtotals in the balance sheet and statement of profit and loss in the presentation relevant to understanding of the entity's financial positions and its performance. So they need to present it based on the headings, their natures, heading, subtotal in the balance sheet, in the profit and loss statement. Such presentation should be so clear. Such a way you should present. You can't put everything. We should add everything. We should subtract. No. So total income, operating income, other income. Other income under we should give what are the other income. Expenses. What are the expenses? Employee expenses, change in inventory. Then other expenses, salary, electricity bill, power and fuel, employee compensation, about bonus given, gratuity expenses. Then we are doing transportation expenses. Then rent expenses, computer, internet expenses, phone bill. Then we are going director salary paid, partner salary paid, partners capital interest. So business bank interest, bank penalty, bank charges. So everything should be given separately. So we can give detail. So that should be clubbed into some headings. Then the subtotal should be there. Everything should be in a beautiful manner. You should present. Statement of change in equity. What is a statement of change in equity? A statement of change in equity includes following information. What are the information? Total comprehensive income for the period. What is a total income? Showing separately the total amount contributable to the owner of the parent and the non-controlling interest. So the comprehensive income including other income. So this income is to them. And such other component of equity in effect the retrospective application of retrospective restatement. Recognition accounting accordance with India as per the India said, if any retrospective effect is given, what is it retrospective effect is given? You need to specify that that is to attributable to the owner and non-controlling interest also. For each component of equity, reconciliation between carrying amount at the beginning and the end of the period separately as minimum, disclosing the change in resulting from profit and loss and other comprehensive income. For each component of equity, you can say what is the beginning, what is the change, what is the end period of this change in equity. You should state that. That is attributable to profit and loss account and other comprehensive income also. Transaction with the owners in the capacity as owner and showing separately attributable by the distribution to owner and changes in ownership interest in subsidiaries that does not result in loss of control. The owner has two things. They has a control, they has a non-control. So transaction owner has his capacity as a owner. What is his owner? Then showing separate contribution. What is the contribution? Distribution to the what is they got from that. That is also the entry it doesn't disclose. And change in ownership interest. So I have bought some asset. I have sold some shares. Bought some shares. Sold some, and how that purchase and sales affecting my control. Controlling is there. The law control is there. I lose the control. That is also be said in the equity change in equity statement. Any item recognized directly in the equity as amount attribute recognized directly in equity as a capital reserve in accordance with Ind AS 103 business combination. As per the accounting standard business combination, if there is an equity that is to be recognized and that is recognized directly in the as an capital reserve, then you should apply what India is 103. What is India is 103? A business combination. As per the business combination, you should disclose these all to be as per the change in equity statement. Information to be presented in the statement of changes in equity or notes. What are the information? Entity shall present either the statement of changes in equity or in the notes. So they can say so change in equity they can state or the separate statement they can say what is that the amount of dividend recognized or distributed to owners during the period and related amount of dividend per share. So I have given dividend to shareholders. What is the amount? When it is being declared, what is the per value dividend per share? How much they are getting? How many shareholders are getting? What kind of shareholders are getting? How much amount? That all to be given. And each component of equity, whether they can be given in the change in statement of equity. If not, they can state in the notes. No problem if they state anywhere, but it should be disclosed. For each component of equity, analysis of other comprehensive income or income by item. By item wise, comprehensive income to be analyzed, and that is also be stated whether in the notes or changes in equity. Statement of cash flow. What a statement of cash flow should be presented as per Ind AS 7. Statement of cash flow. As per Ind AS 7, cash flow should be presented. As it notes to financial statement. What is the notes? The finance note shall present information about the base prices of preparation of financial statement. What basis you have prepared the statement? Or Schedule 3 is being followed, NDA is being followed. Specific accounting policy. What are the accounting policy used? Recognized fixed asset, valuing inventory, valuation of any valuation method. How the asset is being valued, inventory first in, first out, or what valuation method is being used. And if you value goodwill, what is being goodwill in depreciation, what method is being followed, approval method, how you follow or you for you as per your business policy if you want to recognize some goodwill as per what accounting policy you follow. If you are doing leasing, how you found this leasing, are you a lease or leasee, what is the agreement, everything is being properly followed or not. Depreciation, what rate are you following, what is the policy are you following, what rate are you following, and the asset is being how been valued, everything should be disclosed. to disclose the information required as per NDAS and that has not been presented elsewhere in the financial statement. Disclose the information required for NDAS that is not presented elsewhere in the financial statement. If you are saying so, so if NDA is being followed, you should follow. And if the NDA is not giving any definition, you are following some other thing, should disclose what has been and provide information that is not present elsewhere in my statement. So in financial statement, even there some information can't be presented. So you need to disclose something in some part if a other asset. The other asset you need to disclose what is that you can disclose, but relevant to understanding to any of them. You want to make something understandable to the user. You want to make it so clear. So this is we have followed here that you can give. That is to be there in the notes to venture statement. Entity shall disclose a significant accounting policy comprising measurement basis used in preparing financial statement. So how it is being measured, you should say. Other accounting policy used in the relevant in the understanding of financial statement. How the accounting policy has been understand. The accounting policy how it is being understand. That is also you can should say. Okay. So accounting policy, how it has been measured, and how you have prepared and presented in the financial statement. And if the other accounting policy that is relevant for understanding the financial statement. So these accounting policies there, if you understand, you need to understand the financial statement of our presentation. You need to understand these also. That also you can give in notes to accounts. Notes also include information about assumption an entity makes about the future, other major resources of estimation, uncertainty in the end of reporting period, disclosure on the capital, and putable financial instrument classifies equity. So there is some other things, some other major source of estimation you have made. Then there may be some uncertainty. That is, oh, you don't know how the income going to come, but you need to disclose as per the accounting policy. So in that case, also you need to disclose this in this format. This is being said. So these are the things under Ind AS 1. Thank you.